A thumbs up to Apollo Hospitals. Let's move to Suntech Realty, a space that has been buzzing quite a bit. Pre-sales are up 26%, the highest ever FY24 sales at 1,900 crores. So Suntech Realty, it's just about flat right now. The other one is Bector Foods, 1.5% higher. EBITDA has gone up 22%. Margins have improved, so the street likes that. Yatra, there's lots left to be, delivered for Yatra. The stock is under pressure because the numbers have been weak. EBITDA is down 80% for them, so not looking good. Amara Raja Batteries, we just spoke about that. There is positive commentary from the management in the conference call yesterday, and they are in advanced discussions for tech partnerships in lithium-ion cell manufacturing. So Amara is really the stock to look at. But even here, right, I mean, look at this, the advance decline ratio well in favor of the advances right now. Almost 1,800 stocks are looking pretty good. But once again, getting back to this number on the board, 100 points higher now on the Nifty. So very strong start. Let's see if we can build on to these gains. Back to you guys.
All right, thanks a lot for that, Sonia. Well, Muthoot Finance, that's one of the big gainers actually in the F&O market. As Abhishek pointed out, the DAM capital note as well, picture abhi baki hai. Gold prices, they're expecting to remain firm. They're expecting them to gain market share, and they're expecting the ROE to hover around that 18 to 19%. So explains why that stock is flying away in today's trading session. A couple of other big winners, Torrent Power. Take a look at that stock, up close to on 6% as we speak. GMR Airports, yesterday it got clonked back. Well, today, in fact, that stock is pulling back. It's up close to around 4% as we speak. Oberoi Realty as well is up close to around 3%. In terms of top losers from the F&O basket, you have Ipca Laboratories, that's down. APL Apollo has come in for some profit taking. Page Industries, yesterday it surged in the final hour of trade. Well, that one, in fact, has come in for some profit taking. A few more gainers. You have Lux Industries. That stock, the numbers look quite good. There was margin expansion. Lux Industries should come up for you in the screen. I think the stock was up close to around 3.5 to around 4% initially. Now it's up close to around 6%. Orient Electric, they have appointed a new head at the top. So it seems the street has taken that positively. For the time being, the stock is up close to around 3.5%. or thereabouts. Zomato, that's one of the lone losers. It's down close to around 3% as we speak, so that stock's under some pressure. India Nippon, that's another stock that's doing quite well today. That stock's open up with a gain of close to around 3%. And let's wind this down with a few losers then. Some stocks reacting to its numbers. Wellspun Corp, there was margin compression out there. So that one's down close to around 5%. Is Swan Energy, that stock is under pressure as well. I think it's locked in lower circuit with a cut of close to around 5%. And Global Spirits as well, that one as well is seeing a bit of a cut. So the headline index is holding strong with a 100-point gain, but plenty of stocks on the broader markets doing a thing of their own.
Market breadth is looking very solid. It's about 4:1, in favor of advances right now. So it's a good-looking stream. Nifty is up, almost 3 digits, 100 points. The mid-cap index is up. The bank Nifty is looking up as well. A few other names right now which are moving. The number one volume-led gainer right now is Idea, right? I mean, it's in a way, in that sense, it's a retail favorite as well. So 15 rupees, 15 plus now. I think it got to 15.4 and then kind of sold off, which was the recent high in the move up. So this is interesting that Idea is up this much now. Paytm, of course, I think we mentioned another 5% is coming off extremely beaten down levels. So 396 on Paytm. Motherson has got huge volumes, 2% higher, 155 on Motherson. GMR we mentioned. Look at Exicom, the EV sort of, it's an EV play because of the EV charging systems that they make. 10%, 344 on Exicom coming through there. Solar Industries is up 3% at about 9,420. It's a big name, but it's got huge volumes for this point in the day. And that's the reason why we're mentioning it at this point. Torrent Power is up 4%. And this power demand, by the way, has hit a new all-time high, 250 gigawatts. It's higher than we made a new high yesterday. We kind of sort of on that path of newer and newer highs. Last year, the high was made in September, 240. And we're at about 250 at this point in time. Loda is up 4%, 1372 on Loda, that's Macrotech Developers. Mankind is coming up with a 3% pop, stocks at about 2162. There is Prestige, which is up 4%, large volumes, 1594. And so it goes. So this is, the bulk of what's coming up with gains and volume-led gains, mind you, that's more important. The biggest volume-led loser is Zomato. I mean, it's not as if there's a big price damage or anything. It's down 2%, about 177, but volumes are large for this point in the day. Look at that, 9 million shares on Zomato. What else? Cummins India is down 2%. Cummins, of course, had a big move yesterday as well on the downside. And that's coming up with a bit of a sort of selling pressure. IGL is down 1.6, and Welspun Corp, we mentioned, I think made a mention of it, 6% lower on Welspun Corp. So that's at about 566. I can spot a shipbuilder, Garden Reach, down about 1.7% or so at about 1389 on that one. More with stocks in a bit from now. But I think our market master of the day is ready with us. Mahesh Nadurkar is India strategist at Jefferies. Mahesh, good morning. Good to have you with us here. Thank you very much for your time. So let's talk numbers and market reactions. Let's assume that, we get, it's a sort of comfortable majority for the BJP. That's what the election throws up. What does the market do then, Mahesh? Is there big upside here? Or do we kind of just sort of recoup what we've lost over the last couple of days, go back to, say, 23,000 or something and then cool off a little bit? What's the likely roadmap? This is, of course, the near to medium term.
Yeah, thanks and good morning. So I think from the near-term perspective, we've already seen a lot of investor positioning, especially from the domestic investors, domestic retail investors, quite adequately positioned. So my view is that from a near-term perspective, a comfortable majority is probably already there in the price, especially in the mid caps and small caps. I would say on the large cap side. I think it's one can probably say that there could be some upside, especially because we've seen large foreign investors selling over the last few months. But I believe that maybe from here on, the mid cap and small caps could possibly take a bit of a breather because we believe that the domestic retail investment activity in the mid caps and small caps, specifically and broadly on an overall basis as well, is at a fairly elevated level. And what we've highlighted in one of our recent notes is that in the last 4 or 5 months, we've seen that the total domestic buying in equity markets is roughly at about $7 billion a month. That's a staggeringly high number. It's up nearly 3x from a year-on-year perspective. So I think the domestic investors are adequately positioned in my view, and maybe we could see some of that unwinding in the near term.
Okay, so I think, Mahesh, hi, good morning. You made some very interesting points. You're saying that a comfortable majority for the BJP is there in the price in the near term. In the longer term, of course, things are positive, but in the near term, you believe that mid caps and small caps could take a breather. Now, if you just go back to history, right, of during election times, what has really happened? In 2014, when there was this inkling that the market had that Narendra Modi would come to power as a prime minister and there would be big development, etc., the market had a massive rally going into elections, and then post the election verdict, there was a bit of a cool off and there was hardly anything left. Do you think we are in that kind of a situation where the market has priced in almost everything? Now, post this, we could just perhaps see a time correction for a bit in this. Is that the best way to look at it?
Yeah, Sonia, I think that looks like the most likely scenario to me because as I mentioned, we have seen a fair bit of run up already, fair bit of investor positioning as well. The only segment of investors which is not well positioned on India or Indian markets at this point in time is the foreign institutional investors. So there's a good chance that maybe they come back in, but probably that happens more on the large cap side. But on the mid cap, small cap side, I think probably we might need to prepare ourselves for I would say a flattish market for from the near to mid term.
Hi Mahesh, good morning. Nigel on this side, and good to see you. When today is virtually the final day of earnings, the first quarter earnings. How do you see things pan out? I recall at the start of earnings, I think we had a chat. I was reading one of your notes as well, and I think you're working with mid to a little higher single-digit growth for the year. What are you factoring in, and how was the past quarter in terms of earnings?
So for FY25 and for FY26, we are looking at the broader corporate earnings growth to be in the range of around 12 to 13% growth. We definitely expect a higher earnings growth for domestic cyclicals like the industrial, manufacturing, infrastructure, even banks. So that could be in the range of 16-17%. And some of the outward-facing sectors such as the IT services and the others, probably the growth will be slightly lower. So about 12 to 13% on an overall basis, but domestic, oriented in the domestic cyclical sectors, will see a higher earnings growth. on the on the quarter that has gone by, we've seen, I would say, probably a similar trend, wherein we've actually seen some earnings upgrades coming through for some of the names on the capex cycle side. And that's always good to know, because that has been, our sort of core thesis, from a stronger, positive, longer-term outlook perspective. Because investment cycle is really going to keep the GDP growth and the overall corporate earnings growth at an elevated level, and that is happening, as we speak. So, I mean, just to clarify, the thing that I mentioned about some of these mid caps and small caps and maybe a breather from the near-term perspective is near-term, because ultimately a lot of these names, are definitely an attractive play on this industrial recovery, the real estate recovery, etc., that we've been speaking about. So, those sectors, those stocks, would, be quite good from a long-term perspective.
Mahesh, just a quick word on when the sort of, and of course, we're all sort of talking about the base case, because if it is not the base case, it's as someone put it yesterday, black swan, so we don't know, right? But let's just assume that it is the base case and we get what the market is wanting. We've heard the Prime Minister talk about the 100-day agenda, etc. What would be on the market's mind? I'm sure that, in your conversations with foreigners, this comes up as well, right? It's promised kind of a action-packed first 100 days. Just what's your sense? What could be what could really fire up the imagination of the market from here, in your opinion?
So I think from the financial and the market investor standpoint, one of the key events within the first 100 days is obviously going to be the budget. And my sense is that we've already seen the roadmap for the budget in the February budget. So I think the July budget will probably be just a small bit of tinkering here and there. Most likely we will get a little bit more clarity on how the affordable housing scheme is going to be implemented. So that in the bit of limelight, I would say. But other than that, not really too many things, I would say, from the budget point of view, because we've already seen the budget. There could be some other announcements, and maybe from, what we're expecting, not necessarily just from the 100-day perspective, but, in the next 5 years or so. Obviously, things that would include more development on the power distribution side, as we know that there is that outstanding bill, the Electricity Amendment Act, which could see the light of the day, in this term, and which will mean that, if that were to happen, the power sector, which has already been a key focus for the market, would continue to remain in the focus, in the times to come. There is also this talk about, incremental focus on the trade agreements, the foreign trade agreements, and especially one with the UK. And I know that the UK itself is going to their own elections, but maybe, a few months down the line, we could see some clarity on that. And there could be, a whole bunch of things that, that could be happening. Difficult to point out what exactly will happen in the next 100 days itself. But from the market investor standpoint, I think market is clearly discounting longer term growth. And many of these things would therefore impact the market and the stock movement over and above what might be announced in the first 100 days.
Okay, so the first 100 days of the government are important. There's the union budget as well. So is there policy continuity? Is there policy stability? That's something that the market will look forward to, right? Mahesh, always great speaking to you. I mean, we can go on endlessly and, debate what could happen, what shall happen, but nobody really knows until the event is out of the way. So we'll try and touch base with you again, post the election verdict. Anyway, for now, the market is not bad at all. It's a 150-point gain on the Nifty. The Sensex is up 500 points. So clearly this market is using the fall that we've seen in the last, couple of days as a buying opportunity. So the dips are getting bought right now. Whether they last through the course of the day, time will tell. But for now, things are looking good. Blue Star is the first management on the show today. The company reported a strong set. Revenue jumped almost 27%. EBITDA margins expanded. But there was an exceptional gain of 170 crore in Q4 because of the sale of the land parcel in Thane. So we have B. Tyagarajan, who's the MD of Blue Star, who joins in now. Mr. Tyagarajan, good morning. It's always nice to see you on the channel and good to see you early this morning. I wanted to start by asking you about, the usual questions, right? How is growth looking? I think Q4 was very strong for you. But do you think it's just because it's come off a low base? And what kind of growth? I mean, do you think this 25, 30% growth is something that you can eke out, given, the situation? I mean, climate change, the heat wave and all of that. Do you think that growth rates will only improve from here?
Good morning, Sonia. It's a pleasure interacting with you. In your preamble, there is one small correction. There was no exceptional income in FY24 at all. What you are referring to is FY23 had Thane sale land. Despite that, we had performed extremely well. In FY24, there was no such one-time exceptional income at all. It is pure operating performance. Now, going forward, we had interacted when the season was about to begin. I had stated that we all expect somewhere between 20 to 25% growth. But towards the end of March, the temperature shot up. And contrary to our belief that during an election season, the sale can slow down, the market did extremely well. The sale in March alone was around 40% growth, and in April, it was over 70%. Then I had corrected the estimates, telling that, look, the growth now cannot be somewhere around 25% or something like that. It could be even 40% growth as far as the summer season is concerned. Now, the month of May also has gone on very well with heat waves at several parts of the country. And I think it is another month where the sale is over 60%. So therefore, it is quite probable that the first 3 months of this financial year for room air conditioners business can be over 50% growth. And this sets the tone for the rest of the year. Having said that, the new concern, in April, the concern was there was shortage of material because the entire industry had not planned for that kind of growth. Then there were installation delays. Now, May, we all could bounce back and manage that growth. There is absolutely no problem. The new development is the inflation in the freight costs, specifically the overseas container charges and ocean freight, and the raw material prices, which are skyrocketing.
I just had one follow-up. Yeah, sorry, I just had one follow-up. This is a remarkable statistic. You're saying that in the first 3 months of FY25, you've seen a 50% growth rate in room air conditioners because of course, the heat wave. And personally as well, I mean, I don't think I have used air conditioners at home for such a long time span in a day ever, right, in my life, just because of how hot it is here.
Have you got the latest bill, Sonia?
Yeah.
The electricity bill?
I don't want to even look at it.
I got mine, and I must say it was not as bad. It was bad, but it was not as bad. This is for the month of May. I mean, and of course we'll, the cycle basically. So it covered a part of May. But, and that's interesting, right? For people like Blue Star, for a company like Blue Star to make energy efficient ACs, I think that's going to be a big one.
Correct.
I mean, it costs more, but I think the payback could be pretty significant. Pretty
two and a half times the January bill, right?
To see, but yeah, I mean, at least double.
Is crazy.
That was mine.
And it could only get worse, right? Mr. Tyagarajan, I want to understand that from you. So this 50% growth rate, right, in room air conditioners in the first quarter of the fiscal, is that something that you think could sustain through the course of the year? Because I'm asking because April had peak sales, best sales, but how has May been so far? What is the expectation for June? Because this is not something that is restricted to a single quarter anymore. I mean, climate change is something you're seeing through the year. So do you think that these growth rates can sustain?
3-4 points. Number one is that it was over 70% growth in April. It will be over 60% in the month of May. It could as well be over 50% in the month of June. So overall, it could be even 60% growth in Q1. Having said that, this growth we are talking about in comparison with the summer season of last year, which was a bad summer season. It rained throughout, and over the 2022 summer season, the growth was not there at all. It was a flat summer season. So therefore, we should not get carried away by 50% growth. I am of the view that sustainable basis, the CAGR over next 5 years could be anywhere between 15 to 20%. This is the period, like China, we will leapfrog into a very different kind of penetration. So today the penetration will be around 8%. We will be reaching somewhere between 20 to 25% of penetration by 2030. And remember this category. This category, it is not one, if it is a refrigerator, it is one per home. If it is washing machine, one per home. Air conditioners have potential to be more than one in a home. And coming to this power consumption issue, earlier it used to be the case where I can afford an air conditioner, but who will pay for the power bill? So year after year, with each energy label change, the power consumption has been brought down. So the approximate figures I will tell you. If you have bought an air conditioner in year 2000, if you are buying today, it will consume only 20% of the power it consumes. So therefore, the power consumption is no longer an issue. While for a few weeks, people may use for 7-8 hours or so, the general usage is not that much in India. So therefore, I do not see that as a headwind at all. The raw material prices could be now the China has revived, and you are seeing copper prices shooting up. And steel and other metals also will follow like that. And there is going to be even shortage of material if the growth is going to be like this. Another insight I will give you. The room air conditioner, the key raw materials that we use are similar to that of EV. And the growth of both are going to be in the same period. You consume copper, you consume a lot of electronics, and the thermal management system in an EV and an air conditioner manufacturing is one and the same. And the variable speed drives that we use are similar to that. And in China, that's what happened. Most of the component suppliers started focusing on EV rather than air conditioners. So there is going to be a period where the industry will leapfrog, and it is a golden period for the industry with the domestic manufacturing growth happening. But at the same time, to manage the supply chain and to manage the cost is a different game altogether. That's what we are preparing for.
All right. Thanks very much, Mr. Tyagarajan. We had a bunch of other questions, but very interesting statistics. And I think that power statistic is very important. About, ACs bought now use about 20% of the power if, as compared to an AC back in 2000. But I wonder what the cost difference is also now, of course, for some of these inverter speed ACs, etc.
If we have Mr. Tyagarajan, maybe we can check that. Mr. Tyagarajan, do you want to come in over here? The power consumption is much less, but what about the cost of the AC?
Yeah, you will be surprised to know in the past 6 years, the price has remained the same.
Oh.
Okay, all right.
And it has not increased at all. Thanks to the competition. And the other question that you will often ask me is, what is the margin outlook? I had maintained some point of time, it could be 10%. I brought it down to 9.
Yeah.
I think it's a 8% EBIT industry. And therefore, we are making sure the price is also maintained.
Yeah, absolutely. We'll leave it there, Mr. Tyagarajan. Good to have you with us here as always, and interesting chat. We'll have you back with more as over the sort of next many weeks as well, as we get through this sort of summer season. Let's move across to another company. Apollo Hospitals is the next management of the show. The hospitals margins and profits came in better than expectations. Occupancy for hospitals were flat at 65% sequentially. Let's discuss this. And of course, the outlook for FY25, more importantly, with Sunita Reddy, Managing Director at the company. Ma'am, thanks very much. Good morning. Great to have you with us here. Thanks for joining us here this morning. Just to begin this conversation, if we can get the basic hygiene numbers out of the way as we finish one year and look ahead into the next one. What is the expectation for FY25 at an overall hospital level, ma'am, on revenues and margins?
So if you look at our Q4, total revenue was at 4,944 crores. Our EBITDA was at 640 crores. So we grew the top line by 15% and EBITDA grew by 31%. PAT was at 250 crores, a growth of 76%. So I think for quarter four, we've really established the momentum to go forward in the next year. And we're actually seeing this momentum play out in April and May. Having said that, our other subsidiaries, which is Apollo Health Co., actually did very well, registering a revenue of 2,027 crores and an EBITDA of 12 crores. So they have actually turned EBITDA positive. This happened in the last quarter, and they are on this trend of really starting to contribute to margin. And Apollo Health and Lifestyle was at 335 crores. And again, we've seen good growth there. But more importantly, the diagnostic, which is a clear, which is a very strong vertical, has been growing at over 35%. And their revenue was at 117 crores. So again, growth with good margins in three of the healthcare services, Apollo Health Co., Apollo Health and Lifestyle. So
overall, ma'am, yeah, for FY25, should we expect a similar 15% kind of top line growth, 12.5% margins? Is there room for improvement? What could you put some numbers to it?
Yes, I think in healthcare services, it's having shown 17%. I think it's reasonable to expect that we will take this forward because currently we're at 65% occupancy. And our focus this year is on increasing volumes, and that will get reflected in occupancy.
Hi, good morning, Ms. Reddy, and good to see you in. So occupancy moves up from around 65% to what levels in this year? What are you working with regard to this guidance? And also the ARPOB, what is the number? I mean, what could the increase be potentially for the coming fiscal?
So while we're at 65%, we're looking at 68 to 70%. Having said that, our asset utilization has actually moved up because we've reduced our loss. So to give you an example, our hospitals, some of the metro hospitals, which are at 80% occupancy, have an R loss of 4. So when we've been decreasing the R loss, not only has the ARPOB gone up, but it has also given us headroom to offer more beds, and therefore occupancy is there's always headroom to improve occupancy, and this is our focus for the next year. Currently, volumes grew by 6% for and 9% for outpatients.
So improving your occupancy is the focus for next year. I also want to understand in the hospital space, Sunita, hi, good morning. This is Sonia here. In the hospital space, do you have any acquisitions planned, any further acquisitions? I think you recently acquired that 250-bed hospital in Pune. That was a couple of quarters ago. And you have a plan to add about 2,300 beds over 8 locations over the next 3 years. So what does the acquisition pipeline look like?
The acquisition pipeline is, I think every year we do about a bolt-on acquisition. And I think that we are going ahead and doing this. But I have to say there are very few assets available because the way that Apollo does it is that we need to complete our networks in the south, in the north, and the west. And to do so, we need to acquire these bolt-on assets. We have done Pune, we have done Kolkata, and Gurgaon. So these will come live, and one in hospital in Hyderabad. These 4 will come live in 25-26. And we continue to look at bolt-on acquisitions, hopeful that we will be able to announce one this year as well.
Have you looked at the HCG asset, Ms. Reddy?
Yes, we've looked at it, but I think, our oncology vertical is growing very strongly. It grew by 40% in revenue terms, and total revenues were at, we were at 2,200 crores of revenue. So definitely the oncology vertical is growing. We've made investments in oncology, and I think that there is a huge focus on this.
So you looked at the asset, but you're happy growing your oncology arm organically itself. You don't want to look at an inorganic growth because this asset's available.
We are looking at some assets in the oncology space,
But you're not looking at HCG at all.
HCG because I think we have a parallel, network which is very similar.
Okay, all right. I think you did mention something similar last time as well. Well, ma'am, one thing which the analyst from JP Morgan points out, and I wanted to put this to you, is that your revenues to GMV, that ratio is low at about 35%. They point out that this number was in the third quarter of 24 was 34%. In Q4 of 23, that number was 43%. So would you like to comment? I mean, what's going on and what's the outlook here?
So I think we had 687 crores of GMV. And if you look at, conversion, it is close to 40%. And going forward, we have so far been measuring mostly pharmacy online, which is really the biggest contributor. The second is really the lead generation into the hospital network. The third is the teleconsults, and the fourth, diagnostics. I think all of these revenue streams are picking up, but more importantly, we're launching the fifth, which is insurance broking. We've tied up with Bupa. And with this, I think the revenue will certainly grow. There's significant margins, 15% margins in the diagnostic space, and 10% in the insurance, 15% in the teleconsultants. So, I think
in diagnostics, you said the margins are now 11%. You're saying that there is scope to take it to 15%, is it?
Yes.
Okay, by when is that?
By the next year.
Okay, so diagnostics business margins from 11% can get to 15% by FY26.
Yes.
Okay, and in terms of growth drivers for diagnostics, you were telling us about the growth rates, but what are the drivers? Are you looking at any other areas such as specialty, wellness diagnostics, anything else that you can add to your portfolio?
Yes, currently our revenue from pure diagnostics for this quarter was at 117 crores with, like I said, close to 15% margins. And what are we looking at? I think, if you look at, first of all, the diagnostics, we have over 3,000 networks. The size of the network is 3,000. But beyond that, we have clinics, which are 250 clinics. And through that, we're really looking at preventive healthcare. And all of this should convert into more of diagnostics. And therefore, I think that the revenue intensity of the clinics will also improve because we are adding radiology, we're adding, specialist clinics. So the primary care network should grow very strongly.
Okay, Sunita, thank you for joining in and appreciate your time here. Have a great day. And thanks for always, speaking to CNBC TV18 and giving us a view on your business. By the way, let's just get a quick check on the market. It's still holding steady. So it hasn't really given up on its gains. The Nifty is up 130 odd points. When we come back from the break, we'll be joined by Surendran Chemenkotil, who's the CEO of Metropolis Healthcare, to discuss their business outlook and performance for the quarter. Stay tuned.
Welcome back. Well, as promised, let's get chatting with the management of Metropolis Healthcare. We have Mr. Surendran, the CEO of the company, who joins us on the show. Hi, sir. Morning, and thanks a lot for joining in. Well, before we get to the business dynamics, give us some clarification. Why did Ameera Shah step down from the MD position? If you could, fill us in with a quick comment on that.
Good morning, and good morning to your viewers. Now let me clarify, Ameera has not stepped down. Actually, Ameera has stepped up as the chairperson of the company. Dr. Shah, who is the founder and chairperson, has moved into the chairman emeritus role. So Ameera is assuming a higher responsibility as the, executive chairperson of the company.
Okay, so no worries over there. You're saying it's a step up rather than a step down. We got that. So off MD position into the executive chairperson role. So thanks for clearing that, Mr. Surendran. Let's focus on your business aspects then. The wellness testing as well as specialized testing. Well, that's seen a good growth in the past year. And now I think specialized tests, they contribute closer to around 36%. And if I got that number right, the premium wellness is approximately mid-teens, around 15% odd. What's the growth trajectory on both these two segments that you're working with for FY25?
Yeah. So if you look at our quarter four results, we had a strong quarter. We had core revenues grew by about 15%. And the core revenues actually growth is fueled by both wellness as well as specialty segments. Wellness segment, the premium wellness segment grew by about 22% on a year-on-year basis. And our specialty grew by 16.5% on a year-on-year basis. So we see both these segments, specialty as well as wellness, further making it better during the year and, going to fuel the growth in the year to come.
Okay, so that is the specialty in the wellness business. Mr. Surendran, good morning. And now that you've assumed, the role as CEO, I want to understand what is the guidance in terms of the mid-teens growth. Earlier, that was mid-teens growth is something that you've been talking about. So what is the way forward now? How much will you get from mature markets? How much from new markets? What is the overall volume growth that we're looking at over FY25 and 26?
Okay, let me explain this. We had a 15% core revenue growth in the last quarter, right? Mm-hmm. And out of the 15%, 7.5% growth has come from the volume growth, and 7.5% has come from the realization, right? And all our focus market, which are our key markets, 5-6 key markets, they grew almost about 12-13%. And our new markets, which is the tier 2, tier 3 towns, and grown by more than 24% or so. So the growth is largely coming from the newer market that we are entering into, and whereas we are holding our key markets. Now, Mumbai is our, what you call the strong market, flagship market. Mumbai grew by 20%. In fact, entire Maharashtra, the growth trajectory is very, very exciting and very, very, promising in the days to come. So it's actually a portfolio play. We will be growing both in our focus market, our seeding markets, and our new markets as well. It will be going to be a portfolio play, and all the markets must be keep kicking in the days to come for us.
So given that you're looking at newer markets, the mature markets as well, is it fair to assume that you can further build on to these margins? Your estimated margins are around 25.5% to 26%. But are there any more triggers or levers to build on to this?
So 25.5% in quarter four was the best quarter for us in the last year, right? And going forward, we definitely see these margins going up by a 0.5 to 1% better. See, please remember, every year we are adding around 24 odd labs. Last year we added 24 labs. This year we are adding another 24 labs. This actually leads into dilution of the margin by about a percentage. So that is going to continue for 1 or 2 more years, because we will be keep adding newer and newer labs, particularly in the regions of North and East, where we wanted to geographically expand, So that growth will continue, and that laboratory expansion will continue. And also the center expansion will continue. We are added 550 centers last year. And this year also, I see the numbers going up to 500 to 600 numbers in terms of the center expansion. So this will definitely give a little bit of dilution in the margin for a short period of time. But this is a good thing to do when you look at a long-term basis. We are really establishing good quality diagnosis across the country, across the geographies in India. So that's a good investment to make. But having said that, we are looking at productivity improvement opportunities within the organization. And maybe our digital assets that we have already invested in will getting further stronger. and which will lead up to productivity improvement in the year to come. So maybe 1% plus EBITDA margins from what we left at Q4 is going with the guidance in the year to come.
Mr. Chemalkuttal, good morning, Prashant here. Now, in your results, as part of the results, you highlighted that the discount percentages in the B2B segment are lower in FY24 as compared to FY23.
Right.
So it kind of indicates a reduction in competitive intensity. Can you sort of say that is the case for the overall business as well, in terms of discounting, etc.?
So, Prashant, I would not say that the reduction in discount is purely on the basis of lowering the competitive intensity alone, but we have made some very good investments in the B2B segment. We thought, it's not necessarily the price which will play out there. We concentrate on the top end of the B2B segment rather than, going after the long tail of the B2B segment that we had. And on the top end of the B2B, we made some investments in terms of improving their experience. We invested on a B2B portal, the partner portal. We invested on some relationship managers, and we have made some basic fundamental changes in the way we operate in the B2B segment. So that also helped us to focus on the top percentage or top 20% of the clientele, and which helped us to reduce the discounting and stay stable there. So going forward, our focus will be on the top end of the B2B clients on the B2B segment, and not so much on the long tail that we have.
Okay, all right. You're in this mid-teens growth, sir, as you mentioned, for the partial specialized test and premium wellness business, well, it grew very well. But on that base, what are you expecting? Last year it was 16 to 22%, as you told us. But for FY25, what are you penciling in for both these two segments?
Okay, let me tell you, see, wellness is 15% of my total portfolio.
Yes.
And I clearly see there's a good headroom of 4 to 5% more in the next couple of years. So wellness awareness in the entire country is increasing. People want to go and do their health checkups on a timely basis. And we are also trying to engage with our customer on a 360-degree basis on the channels, like, for example, on our centers, then they walk in, on the digital channels, and also through the life cycle management, we reach out to the customer. So we are getting good response on the wellness segment. I clearly see the wellness segment taking a growth of 20 to 25% year-on-year basis, and helping us to make this portfolio as big as 18-20% in the next 2 to 3 years time. And similarly, on the specialty, we are making a lot of investments on the high quality, high-end test, and in terms of, let's say, genomics and molecular biology, etc. So we're making some investments. And also we are adding the test menu on all the therapeutic areas like transplants, neurology, nephrology, oncology. We're making a lot of investments. We're also making our sales force good enough to go and meet up with the specialized doctors. So all this put together, I'm quite optimistic about a good positive movement on the overall specialty segment. So currently it's going about 16%. I would definitely want this to be in the range of 20% going forward.
Got it. So we've got both those two out of the way. 20% for specialty, and wellness segment could grow by nearly around 22 to 25%. Mr. Surendran, if competitive intensity is fading a little bit, it could give an opportunity to buy some of these, smaller size companies, and you have some cash balance as well. Is inorganic growth something that you're actively looking at, and could we hear about something in the first half of the fiscal?
Yes. So, yes, you are right. The pricing competitiveness is really coming down because everybody is realizing that it's better to stay prudent in this industry. And hence, we really clearly see some amount of stability in the last 12 months in terms of pricing stability. We are definitely looking at some acquisitions, right? Which will, we basically look at acquisition from two lenses. The first lens is, can I get some good acquisition which will complement my geography expansion, particularly on the north and east part of the country? If we get some good acquisition, good assets, we'll definitely look at it. And also the other lens we're looking at it is the skill set in terms of complementing in terms of skill set. If I get some good, high quality, high specialized areas of diagnosis assets available in the country, we will look at it. So these are two lenses that we are looking at. Our team is definitely doing all kind of due diligence, and in the event we come across a good asset, one or two bolt-on acquisition definitely on the cards during this year.
So if and when you close these acquisitions or assets, right, you've earlier said that you won't look at taking debt at beyond 2.5 times EBITDA. Just want to confirm that. Will most of these assets be acquired through internal accruals, or are you planning to take on any debt? If yes, how much?
See, this all depend upon what is going to be the size of the asset. right? And if the size of the asset is smaller, definitely we have internal cash accruals. We'll use the cash available with us. But if the asset is relatively bigger, then we will need to look at other avenues like a debt or maybe swapping the shares. So we will look at all the options and depending upon the size of the asset, we will take a call when it comes closer to the acquisition.
All right. So you're saying when you talk about swapping shares, the acquisition that you're looking at could be a listed company as well?
Not really. I would not like to comment about it, before it really get matured about it. So we are thinking about some. Basically, see, we have mentioned in the past also, we are looking at bolt-on acquisitions. So you must read it from that lens. So bolt-on acquisitions, our strategy, maybe a couple of bolt-on acquisitions is what really we are focusing upon.
Okay. Finally, you earlier said that the margins may see some pressure because of the new lab rollouts, but you also spoke about some cost optimization which could offset that. Can you tell us what is the cost optimization and what would this margin pressure be? I mean, just net, what would the impact be on margins?
See, pre-COVID, we used to run on a 26 to 27% EBITDA, and I think that's a decent EBITDA in this industry. And we closed last quarter with 25.5%. So our endeavor is to bring closer to the pre-COVID EBITDA, in the year, this year or maybe by the end of next year. We want to definitely bring it to the pre-COVID levels of EBITDA. Now, the levers available here are basically 2-3 things. One, of course, is we want to expand our B2C business. B2C business comes with relatively higher margin. So, if we are expanding the centers, we are expanding the labs. I mean, we are also, amplifying our contact to the specialty doctors. All this should help us in terms of improving the B2C business, which is definitely going to help us improve the margin. And secondly, we have done a lot of lot of investment on the digital assets, improving the technology space. And that's going to give us a lot of productivity enhancement in the days to come. And this should really help us to reduce some kind of cost. And we are also looking at the whole material productivity because good negotiation with the vendors and using some best practices, benchmark practices across the company, we should be able to reduce some level of cost on the material. So all this put together, we will definitely see some improvements in the margin. But like I said, when you're expanding 25-30 labs every year, it will have a dilution of a margin, maybe about a 1% for till the time we keep expanding in the labs. And I see this year also we're expanding labs in the same proportion. Maybe later, the lab expansion will slow down a little bit, and then you will see further improvisation on the margins.
All right, we leave it there, sir. Thanks very much for your time. And, we'll speak once that acquisition happens or other development as you outlined. Appreciate you sort of coming on. The market's come off. We're up about 75 points, so it's not as great as it was when we started. But and I think we've of course, we're below the opening levels. But it's not a bad-looking screen either, with market breadth, etc. Still, okay, market breadth actually is turned. The advanced decline line will come up. You've got about 1,300 stocks down and about 1,000 stocks, just under 1,000 stocks, which are higher right now. So there's been a bit of a flip which has happened from the time that we started. I just want to put out a few names here on the downside. PFC is down 3.25%. It's the biggest volume-led loser right now. Schneider is down 5%. It's got huge volumes on it. And there is names like Ipca Laboratories down 6%. None of these were in the mix early on when we looked at these rates at market open. Welspun, of course, it was 6.5%, 7% lower. Linde India is down 4%. There is PNB Housing, which was down about 3.5%. Shakti Pumps, which has seen a runaway rally, is down 5%, so a bit of a pullback. We highlighted Swan Energy in the morning as part of top 10. That's down 5% now on decent-sized volumes. And Ice Maker Refrigeration, 6%, almost 7% lower at about 670 or so. And I mean, it's a longer list, but these are the biggest volume-led cuts that we've got going on in the broader markets. We take a break. Rohit Srivastav of India Charts will be with us with his perspective on markets very near term around elections verdict. That's coming up in just a bit from now. Okay, welcome back. The market is what we're focused on now. 60 points is basically gains have been cut in half, from the time that we started trading, which is about 50 odd minutes ago. So 22,545 is where the Nifty is now at. Rohit Srivastav is founder and strategist at IndiaCharts.com. Rohit, great to have you with us here on the program. Thanks very much. So it's an interesting time. But first, I want to sort of ask you about the massive flip in terms of index shorts from FIIs. On end of day on Wednesday, that number was about 5,000 contracts, right? That's now almost 2.97, almost 3 lakh net shorts in index futures. That is substantial. Is that, would you reckon that's largely hedging? Is that, and somewhat, of course, expressing a view as well? Just start there, Rohit.
Yeah, so there is some expression of view, which means possibly the FIIs see some risk. Remember that FIIs and clients are at the opposite end of the stick, and the client side positioning also is similarly gone up. Now, there's something peculiar about this positioning shifting, very, very fast from one side to the other, not just yesterday, but it's happened a couple of times since March. You saw it suddenly go to the long side, then to the short side, then to the long side. And this is the third time we are seeing it gyrate, and probably this one is the fastest. Last time it took 2 days. This time it's like 1 day. Why is it happening? Maybe they are just knee-jerking with every swing of the market. If I compare this to previous elections, what we had seen both in 2014 and 2019, both which were BJP wins, was that the FIs were positioned on the long side. So they're betting on, the continuity part, and that sort of worked out. It's only when they had excessively long positions, the market did pull back even then, but eventually rallied higher. So at the start of this month, we actually had the same situation. You had FIs being short, and that caused a rally because there was short covering. But once that covering is done, we are once again seeing, downward pressure. So what is it that is, concerning? I think possibly this is just a bet on this becoming a non-event because, and by non-event, I don't mean a complete loss, but possibly that, the numbers are very similar to the previous time. You may not see too much change. Maybe that's the bet, and which is why, markets, if they have priced in a very big number and maybe if it's not going to happen, that is what the, market behavior and the positioning may be suggesting in the very short term. But what people should also pay attention to, because like what I said in the beginning, that when you get extreme positioning, you also get trend reversals. And we may not have reached the highest short from FIs, but this is, I think, the 4th highest and also the highest since October. That means 2nd November, I think, was the peak point where you had almost 3 lakh, in fact, 3,50,000 contracts short. Now you're almost close to 3 lakhs. So this is the highest since, the 2nd of November, 2023. That resulted in that big rally where, Nifty went from, almost just below 19,000 to 22,000. So that was a big move. Now, if after or around the election dates, once all the uncertainty is done, if we do see this positioning still at an extreme, then we would take it as a bullish signal. But as of now, because we are still ahead of the results, it looks like a bet on the event itself and becoming a non-event or slightly negative in the sense that, oh, you didn't achieve the big numbers. But medium to longer term, markets always like stability. We spent all of the 1990s waiting for a stable government, and now the only thing markets want is, as long as there's stability and there's continuity, we are okay in the medium to long term. But short term, I think it signals some volatility on the downside because of maybe the numbers won't be met type of thing. But eventually, if that results in a excessive short position, then it will also, give us the reversal that we want medium to longer term later on.
So this kind of ties in with what others have said, that a victory is kind of priced in. So then what? Then after that, so maybe you kind of taper off a little bit, right? That's essentially what you're also saying from a FI and index futures positioning point of view. That seems to be the more.
It's like the buy on expectation, sell on news event.
Right. But nothing. You wouldn't see this as some have pointed out, expression of a view about the number itself, like pre-positioning for that. Pre-positioning in some way, but nothing very large in that sense, right?
Yeah, I mean, they had it right. If I go by the history, FIs were long the last 2 times. They had it right in the near term. Though on the event day itself, after the event day, we actually saw a dull market in 2014 and 2019. So that is where the option traders basically get killed in all of this, because the VIX collapses, right? Right after the event, what happens is the VIX has moved up, almost doubled over the last month, simply because of pricing in market volatility on the event day. And then when the event comes and then the volatility collapses, basically you don't really make much out of betting, one way or the other on the event. The real money gets made only after that, once the markets start developing their own trend. So it's good to really wait this out, because at least for option buyers, this is not a great time. Probably sellers have a better, outcome here. So maybe spreads is what people would consider, where they buy a call, sell a put, and that those kind of spreads would actually be better off, because at least you will earn the premium and cover your risk of options decay.
Okay.
But overall, yeah, it results in nothing. Short term, it's just a bet on that. Yeah, if things are just you don't get a very big number change, then market sell off because people just book gains that were based on this.
All right. Hi, Rohit. Good to hear your thoughts this morning. Thanks a lot for joining in. Well, someone asked what's going to take this market higher if the outcome is favorable. It'll be the FIs. Aggressively net short, they get stumped on the wrong side. And the flows as well have been lacking in the past 45 days or so. So let's see how that goes. But since we were talking about the option strategy, if you could fill us in with our strategy, if it's possible, and also the VIX movement. In a matter of a month, it moved from, 11 to around 24 odd. In the past as well, I recall even in 2019, we did see this happen. And then it cooled off. A quick comment there.
Yeah, so the numbers, so the change in VIX was very similar. The numbers are different. Like last time, it would have gone from 14 to 28. This time, it went from 11 to 24. So sort of a doubling in the VIX ahead of the event is normal. So it's the same amount of change. It's just that last time you went to 28, 2014, you went to 35. But post the event, in the next 3 days, the VIX came off very sharply. It took 3 days. In fact, I just checked that it took 3 days to come off, and then almost halved from there. Like it went back from 28 to 14 eventually. And so that is the option loss. So when you're going to see that kind of an option loss, when you do some kind of a spread strategy where you're actually selling a call or a put versus what you're buying, maybe you buy one call, sell two puts, those kind of strategies actually do better, or at least hedge you to some extent on the option buying that you do. So you don't really lose much. If there is a move, you have something to gain on the spread. And if it doesn't move much, your loss is limited by the premium decay that you actually get on the option. So that's how one has to think about it.
Okay, thanks a lot, Rohit, for joining in. And a lot of volatility ahead of the election results. In fact, for now, the mid-cap index has moved into the red and, by a large amount. So down 200 points in the mid-cap index. A lot of stocks are slipping in trade. So, just better to be cautious as there is a lot of volatility kicking in. But Nimesh is joining in. He is going to talk about M&M. Remember, we highlighted it as part of our standout brokerage report. And it is one of the big movers today. Nimesh, over to you.
Thanks, Sonia. So, as you said in the morning as well, there was a big upgrade from Boffa Securities on M&M. So, today they have upgraded the stock to buy from neutral, and they've raised the target price on the stock to the 3,050, a potential 24% upside from current levels. Now, Boffa sees multiple growth levers and catalysts for the stock going forward in the next 12 to 18 months. They believe that the core business will gain market share in the SUV, as well as this year turnaround in the tractor business as well. In fact, they expect the subsidies to contribute more going forward as far as M&M is concerned. So they have a consolidated EPS CAGR of 18% with a 20% ROE, and they believe that valuations at 19 times forward is quite reasonable. So on back of that, a big upgrade to a buy now from Boffa, and they've raised the target price now to 3,050, a potential 24% upside from current levels.
Okay, thanks a lot, Nimesh, for that. Let's slip into a quick break. When we come back, we'll connect with Shiju PV, the senior partner, India Law LLP, and Kumar Saurabh Singh, who's the partner at Khaitan and Company. Stay with us.
Okay, welcome back. There's market under a bit of pressure, but 60 points under pressure from the day's high, but otherwise, looking pretty pretty good. Now, Finance Minister Nirmala Sitharaman has said that the Insolvency and Bankruptcy Code has played a key role in helping banks recover from the NPA crisis. Macquarie, in a recent note, has said that the initial high recovery rates were boosted by large steel sector resolutions. But, the recovery rate actually has been falling since. We have a couple of gentlemen with us to discuss this. We have Shiju PV, Senior Partner, India Law LLP, and Kumar Saurabh Singh, Partner at Khaitan and Company, joining in to take this conversation forward. So let me just start by sort of posing what Macquarie in a note is saying. They're saying that the March data by the IBBI reveals that recovery rates over the years have been falling. And as I said in my preamble, the initial high resolutions were led by some large steel accounts, resolutions there. And then, of course, go on to detail a whole many reasons why the rates actually have been falling. Saurabh, if I can start by, gentlemen, good morning. Good to have both of you here. Prashant this side. Saurabh, if I can start by asking you to sort of react to what Macquarie is saying, and if you want to put some of these numbers in perspective. Go on.
Well, thanks, Prashant, for having me. I think, the data that is presented by Macquarie is there for all to see. So, clearly there has been some drop in the recoveries, which you see from the insolvency process. But overall, one has to see it in the context of the framework which has been put in place in last 8 years. You can't just look at 1 year's number. I think overall in last 8 years, the framework has done well. It has helped in the overall resolution environment of the country and for banks to really being able to turn around companies which have been in distress. So in that sense, the figures cannot be looked in isolation. But yes, temporarily there has been a drop, and I think it requires some intervention both from government and judicial side to really see where the backlog is getting created, because clearly it's the delays which is pulling down the recovery. Even if you look at IBBI numbers, that also indicates that the moment the resolution period goes beyond 1 year, the recovery rates tend to go down. And this is in a way indicator of, say, process running well beyond 30 days, which is what the law prescribes as the time frame for resolution. So as the time period passes, your recovery.
But what is in your opinion, Saurabh, in your opinion, what is the main reason for the delay?
I think there are, of course, judicial backlog is one aspect which clearly contributes to the delay. But I won't put the entire blame on the judicial side only. I think all the stakeholders really involved in the process, be it the creditors committee, the way it is functioning, that also has to really take responsibility of being able to take quick decision, because sometimes what tends to happen is that decision making is prolonged, and that tends to eventually cause say disagreements and leads up to dispute, which then ends up in judiciary. So I think all stakeholders need to really sit down and work together to help improve the numbers.
Shiju, your first thoughts on this?
See, IBC has been more or less similar with other kinds of recovery laws as far as recovery is concerned. So it didn't bring much changes as far as recovery percentage is concerned. But we have to see IBC from an overall holistic perspective. The purpose of law is not just a recovery, because there are many laws for recovery alone. So it has to see its purpose is to bring resolution and also to improve the overall credit environment of the country, to bring some credit discipline. I think from that perspective, IBC is working well. So in an economy like us, there are two kinds of default. One is actual business default, which we cannot stop it. But as far as willful default is concerned, the promoters are a little wary now to actually default that kind of a situation. So that's an improvement, I would say. And regarding the reasons, judiciary is always there, but that we have to live with the judiciary. But also from the judges' side, because we have to understand that IBC is not a typical adversarial law. So something like judges has to come out and take an active role in the resolution. That's something is lacking from the benches. Similarly, insolvency professional, they have a very active role to play in overall insolvency resolution process. Somehow the training, their expertise is still lacking despite more than 7 years we are been in this law.
Okay.
Similarly,
so
I
that
would
some of
say
that institutional capacity is yet to be built. But I just want to make compare that, so as compared to earlier recovery rates under CDR, etc., you're saying recovery rates have largely remained same under IBC? So there's not much change, that's what you're saying?
There is not much change.
Okay. But fresh defaults, sorry, go on.
Yeah. As you said, the fresh default, especially the willful default, I think it's coming down because promoters are not really worried. And also we have to understand that the second tier of the IBC, which is personal insolvency regime, is not yet taken off. Only the personal guarantee regime is still effective. So once the personal insolvency regime is also taken into effect, it will bring much more credit discipline in the country.
No, this Macquarie note, and of course the data, as Saurabh also said, is there for everyone to say. They say that 44% of the cases admitted go in for liquidation, and that is a matter of concern. Saurabh, you want to respond to that?
Clearly, I mean, the number of cases going into liquidation is a matter of concern. The time being taken in the process to resolve, even in case of successful resolutions, is also a matter of concern. But as I was saying earlier, the framework for resolution has strong foundations. Today, in last 8 years, we have seen stakeholders benefit out of the process. The banks have really had seen good recoveries in last 7-8 years. Some of these problems, like a lot of cases going into liquidation, could be, say, addressed through time-bound resolution. The amount of time that you take effectively impacts the prospects and in a way brings down the confidence also. So what we see today in Macquarie's report really is an indicator of the fact that today there are problems in the process, but it still may be much better than what we had earlier. And some of these problems from time to time, which has arisen in the process, government has proactively addressed. So in that sense, with the kind of statement which has come from finance minister, it's clear indicator that both RBI and government are very clearly looking at this framework to really be a resolution process which helps in quick resolution and helps bank to really manage their NPL problems. So I think some of these issues, including the backlog, capacity issues, the decision making, has to be resolved through continuous dialogue and discussion. And clearly, you will see that NPL numbers for banks is looking much better. At the same time, you have a higher number of cases going into liquidation. In a way, that is, that doesn't compare well together. So I think somewhere the system needs to look into these aspects also and find ways to really minimize the time process spent in the resolution and at the admission stage also, because what we are also seeing is that at the admission stage, anywhere between 3 to 6 months is being taken for admitting companies into insolvency. Now that's the area where I think there is room for clear improvement, and that's the stage where companies need most support. And if you are able to really admit them quickly if they need resolution, then you will see probably reduction in the number of cases going into liquidation.
I mean, greater the delays, lower the recoveries. I mean, I think the data is very, very clear. Saurabh and Shiju, great to have both of you here for that quick chat. Appreciate your time here on CNBC-TV18 today. And we'll continue to track this data point and what can be done, as both of you said, that, a lot of things need to come together to build institutional capacity to kind of resolve this in a more timely manner, admission into the process itself, and of course then fast-tracking this so it doesn't see inordinate delays. The market, by the way, has come off. We're about 40 points higher, which means we're about 80 points, 85 points off the day's highest level. Nifty Bank is flat. Mid-cap index has turned red. And I think the small cap index has also come off sharply from the day's high. It's a wrap on this edition of Bazaar. From all of us here, it's goodbye. Thanks very much for staying with us. Chartbusters will pick up on the action in just a bit.
Apollo Hospital surges after delivering a good set of numbers where margin and profit both came in better than estimates. The management tells CNBC-TV18 that occupancy could increase to 68 to 70%, also on the lookout for acquisitions.
Well, Muthoot Finance climbs on the back of a strong showing in the fourth quarter. The AUM growth was strong as gold prices surged. Brokerages Morgan Stanley and CLSA raised targets, expecting strong loan growth in FY25.
Jio Financial Services slips even as it announces the launch of their beta version of Jio Finance app, which integrates digital banking, UPI transaction and bill settlements.
Zomato slides as brokerage firm Macquarie downgrades the stock, citing a rise in competitive intensity. This comes as Jio Mart plans to start delivering groceries in 30 minutes from next month.
Welspun Corp comes under pressure after the weak quarter. Margins contract while EBITDA slips 21%. The company's guidance remains muted with revenue growth expected to be flat in FY25.
Hello and welcome to Chartbusters. I'm Najla D'Souza. Join me as always is Mangala Malu. Well, it's a big weekend that we're bracing for. Later this evening, we'll get the inflation data coming out of the United States, the PCE data to be precise. Tomorrow, in fact, we'll get the exit polls. And then on Sunday as well, you have the OPEC meet. So Mangalam, plenty of cues coming in there. And the markets are a little bit nervous. You can just look at the screen. We were up 150 points. Now we're up only around 50 points. The mid-cap index as well, from trading well in the green, you had way more number of stocks in the green. That's quickly turned around as well. So some nervousness in the market may not be such a bad thing because you're going into the event light. If the outcome is favorable and there is continuity, then we could see a bazooka move on the upside as well.
Speaking about a bazooka, let's add music to it. The Beatles say, "Hey Jude," take a sad song and make it better. How about "Hey June," take a